Greetings, everybody. This is Jeff Scott, and welcome to this week's edition of my top-down review. I titled today Melting Up, and this is being done on the 10th, but will be posted probably on the 11th of October, 2020. Feel free to reach out to me. You can comment in the remarks section, or you can email me at hgsidoc@gmail.com. If you're watching this on YouTube, the file is fairly large. The initial video will pop up in SD, which is not usable. An hour after I post it, it'll be HD or 4K. There's a little gear in the lower right-hand corner. You can click on that gear and increase the resolution once the 4K video is loaded. Under the remarks key, you can actually go down and see a link to my Dropbox where you can actually download the video to your computer and have the best resolution regardless of your monitor. And also, while you're at it, if you wouldn't mind, hit the thumbs up if you like this, and subscribe, because I do not keep a mailing list, and therefore I'm not going to tell you the next time I do this unless you get it on the HGSI board. As always, this is for educational purposes only. Any recommendations are in the spirit of education and not investment advice. I am a doctor, not a broker. I am independent. I have bought all the tools that I use and I demonstrate, and nobody pays me anything to say good or bad things about them. Trading involves risk, and you alone are solely responsible for any investment decisions you make. Also, from time to time, I will talk about options and leverage, and I just want to add that these could be considered higher risk approaches, and I would like to refer you to the Options Industry Council website for more information. When I do live education, which maybe someday when COVID is done and I'm retiring from my day job in a couple of years, I'll get back to doing that. I title my education Be Your Own Guru, where I think it's important for you to learn from many different folks, find what works for you, blend it together in your own style, and this is who I've learned from, among others. What I need on my desert isle, besides high-speed internet, is I need my TradeStation or Thinkorswim. I've got a number of indicator packages, including the Q and Dr. K tools. I use HGSI after hours and during hours for analytics, EdgeRater as well. And then the Q tools have some excellent Excel spreadsheets. Unfortunately, they require Refinitiv data, which is Thomson Reuters or Metastock data to use, and that's an added fee. No way around that. Please note, I have introduced you to many of the folks whose material I use, and I am never paid by them or any vendor when you buy something that I suggest or use, and any affiliate fee that's offered to me is passed to you as a discount. Thus, I am an unpaid volunteer, and this should just be considered education. The website for HGSI, the software tool, is highgrowthstock.com. And the couple things here: free 30-day trial, does not require a credit card. And under investing strategies, you can see hundreds, if not more, videos by myself, Ron Brown, and others with special guests like Gil Morales. Stock patterns are cyclical. All right, you need to know where your market is, sector, industry group, and stock. Where are they on this pattern? And not only where are they, and they may be in different parts of this pattern if you look at different time charts. Now, what do I like to do? I like to find stocks that have been going sideways for a while and then get momentum and take off. And that's when, to me, is when they start to get marked up. I like to short stocks that are breaking down or markets that are breaking down. And boy, oh boy, did this week not feel like we got a new leg up. Now, the challenge with a new leg up here is we do know we've got an election coming up, although maybe there'll just be relief when the election's over. So I'm not sure how long this leg is going to go, but this was a giant bullish week, as I'll show you. So in my mind, we probably weren't coming off of fear and then ambivalence and going into greed. I think we just took a pause in uncertainty and resumed the bull market that we've been in. The question isn't, how far we've come. It's how far do we have to go. Your approach to the market must change with the cycle. So I became much more offensive last week, buying stocks and calls, and covering most of my contra ETFs. Friday sector review, you could see, not perfect. A lot of red over here, which is real estate. Energy, shocking alert, was red, and financials were some of the laggards. That's something we've seen for a while. Major markets, let's just take a quick look inside Thinkorswim. And let's blow this up. So I like looking at the futures and the cash markets. Here we're going to look at futures. So let me just set you a little bit of where we are. This is the E-mini futures. Up here are some of my favorite signals that I might follow. If they're white, it means it wasn't triggered. Okay? This tells me my range of the day, my 1% move, my force is positive. This little here tells me the low of the year was back here on this date, which was March 23rd. The high of the year, which happened to be on the E-mini futures, all-time high at 35.87, was on September 3rd. And as you know, we've been in a market sell-off. Now, the market has bounced over the last 2 weeks or more. And isn't this beautiful? We've got 3 nice green soldiers up, and we've crossed over the 50. The 17 may cross over the 50 in the next day or two. The 200 is pointing up. As I look at this, to me, it's very bullish. And the reason why it's bullish is we've got a little ways to go before we get to the resistance that I'd expect to see at the prior high. It's bullish because I'm above that 50 and 17 days, so I've got some support underneath. And, it just feels like this market wants to go higher. Now, a breakdown below that 50, all bets are off. Notice on the way up, this 50 in yellow was support until it was broken. Then we struggled to get above it, and then really impressively on Wednesday broke above it. Thursday and Friday were strong days. If I look at the NASDAQ future, same thing, low of the year back here on the 23rd, all-time high in the NASDAQ on the 3rd of September. A new person buy signal came in on Thursday, and we had another good day on Friday, and all the reasons why I said I was bullish here on the E-minis, whose buy came in a little bit earlier. I'm bullish on the NASDAQ. Again, it's above its major moving averages. If I look at the Dow futures, and same thing. The big difference here is the high of the year was before the sell-off, and we have failed to take out that high back here in early September. We'll see what happens now. The low was also on March 23rd. Is this more bullish than bearish? I think so, although here at best, the 200 days going sideways. I think it's actually trending down a little bit. You still got to get the 17 above the 50, but what a strong couple of days on the Dow. If I look at the Russell futures, almost the same story as the Dow. We have not taken out not only this year high, but the all-time high was 2 years ago or more, and the low of the year did occur again, this time on the 19th of March. We're in a buy signal. We've had a nice run here. Perhaps we're starting to get a little stretched on the RTI or the Russell futures. The VIX, as you'd expect with a super strong market, dropped below the 50, but even here it's still well above where it was before the market rolled over. And then if the stocks are strong, you can probably count on the dollar being weak. And after a big run up here, which tanked some of my gold positions, the dollar has sold back off, has now dropped below the 50-day moving average. So that's the dailies. Well, the weeklies, we'll just look here in the slide. And I'm not going to show you anything outstanding or different in the weeklies, but again, weekly buy on the E-minis, not yet on the NASDAQ, a weekly buy on the Dow, a weekly buy on the Russell, a weekly sell on the VIX. That's a pretty bullish sounding market to me. Now, I also like to look at certain things underneath, and I will look at all these things during the week. We're at 9 minutes and 30 seconds. When I'm not talking, I can do this entire deck, or looking at each of the things in the deck in about 2 minutes, 3 minutes. Rates rose this week on the 10 and the 30. You know, that would mean something to bonds. It should also help banks, and it could have helped insurers, which it did. Russell 2000 and 1000, look at this. The big stocks are at an all-time high on their AD. The Russell 2000 is struggling to get back up there. and the indexes responded favorably as well. You can see on the NYSE, we're still below the prior all-time high, but not by much. And all the major ETFs is listed here in the upper left-hand corner turned up, except for TLT, which with the rising rates, no surprise. The thing that really shocked me was when I looked at how much 1 week mattered on breadth. Stocks above the 200 shot above this line, which had been somewhat resistance in the past, and now telling me we're getting a little bit overbought. And look at how much stocks above the 40 bounced. If I look at the T2121 and TC2000, which is the 12-week or the 3-month new high, new low, we are now in overbought territory. And over the last 25 years of I following this indicator, this tells me that the market is getting ready to pause. Now, one thing I've learned is overbought markets and oversold markets can become even more overbought and oversold. So we might see some shifting in leadership and changing in place to ease off some of the overboughtness. Daily McClellan and weekly McClellan, we look for extremes, we look for divergences and zero line rejects. We do not have those now. The prior divergences were confirmed with the recent sell-offs. Let's look at the buckets. Imagine you could take with one button all the stocks in the S&P 1500, hit your button, and then get a graph on the right that tells you that 88% of the stocks in the S&P 1500, their price is above the midline in their Bollinger Bands. That is very bullish. And about 18% of the stocks are above their Bollinger Bands. As I said, we are getting overbought. I've seen this number get much higher, and in a bull market, this usually results in sideways and not necessarily any dramatic pullbacks. Now, eventually, we're going to be talking about all-time highs and extension and risk. We're not there right now, and I would not expect to see in HINDY, and I don't. Hindenburg Omen is a signal that Ian brought out of the folklore that has predicted every major market sell-off. The problem is only about 25% actually are significant. Market tone, the Woody indicator, speaking of Ian, down here, all green. This is a shift. We are in, that's a very bullish tone. The sectors also are all green. Now, when I looked at last week, and why do I call it a melt-up? Well, let's look at this piece here. So, in fact, we'll leave it here. What I did is, and thanks to those who sent me the archive or the HTML file, using the fundamentals from last weekend, I asked the question, how did they relate, especially certain things that we follow, to performance this week? We like ERG in HGSI land. ERG stands for earnings per share rank, relative strength rank, and group rank. You add 3 times 99 together, the most you get is 297. What we see here in the gray line are the number of stocks at the various ERGs. I eliminate the first 3 or 4 because the number of stocks are low. I eliminate the top 3 or 4, the number of stocks are low. When I look at the heart of this, I see a lower left to upper right pattern, and that tells me that high ERG stocks outperformed. The other thing I notice is everything was 4% or higher. That just tells you how strong of a market. Down here, highest earnings per share stock. Here, highest performance. Highest relative strength rank last week, highest performance. Group rank was all over the place, as was AD line. Over on the right, using a tool called the Group Performance Analysis Tool in HGSI, I look at the performance of a number of groups to see how the market did. And frankly, how I did. If my stocks are not working, I know that I either change what I'm doing or go to cash. The S&P was up 3.8% on the week. Talk about strong weeks. The IBD 50 was up 4.99. The weekend review and the Market Smith 250 were up 5.41. That is amazing. Okay, look at that weekend review. 109 up, 8 down. How did I do? Well, the holdings I had on Friday, had I kept them all, 53 winners, 10 losses, up 5.43%. The buy watch, unfiltered, 44 wins, 6 losses, up 4.66. My filtered buys, which is where I go fishing from, 12 wins, 0 losses, up 7.48. So I would say a couple of things. Market was unbelievably strong. My stocks and growth stocks outperformed. And we'll look perhaps today at some of my recent picks and talk how I might be managing them. Down here, speaking of recent picks, shows the performance over the last 7 days or 5 market days. If you watch either of my last 2 videos or more, I've been talking about renewable energy. I've been talking about Hgsi, Plug Power, Solar Edge, Enphase. I've been talking specifically about Quidel and Hgsi. Hgsi last week saying it was my favorite chart in the market. These are the stocks that were in the Best of Woodward and Brown on Friday, and you can see as individual stocks here how you have performances between, except for the 2 laggards, Lowe's and D.H. Horton, 11 to 42%. Breadth. Now this one sort of bothers me. This is a shot that I just took from the Q Edge tool, and it shows that despite, and the reason why real time is 0 because the market's not open today, despite strong market indexes, we have 5 positive sectors and 6 negative on Friday. How can that be good? And we look at communication was negative, energy, financials, real estate, utilities. That's interesting, isn't it? Now, if we look back over the last month, and thank you to Sagar, it's amazing. On Saturday night, Sunday morning, I say, if only Sagar could do this, it would be great. And the next week, he sends me an email that he's sending me a beta copy that has that incorporated. I love this slide, all right? I've got, on the top, I have sectors, 11 sectors. Next, I have industry groups, and on the bottom, I have stocks. Now, the Q Edge, which is this is based on, works off the S&P 1500. So these sectors are populated by the S&P 1500. Therefore, if you're comparing it to these spiders, they may be different because this is a broader base of stocks. How does what's on the left differ from everything else? It's clear. The breadth seriously weakened. And frankly, you had more sectors negative on Friday. You had a 50-50 split on industries and essentially a 50-50 split on stocks. So on a strong day, when I see that, that tells me there was weakness underneath. Now, if I look at Q Edge, I go onto the sector tab. I can rank by 1-day performance, and there's your energy, real estate, financials, utilities lagging. Leading were IT, staples, healthcare, discretionary. Now, what I probably want to do here is to identify the top 3 groups. And if I highlight those and I hit these gears, then I list the various industry groups that are found in those 3 groups, and I do some top-down investing intraday. Now, I've now highlighted from 146 to 130, and now I'm going to hit the peer analysis, and I pulled up, and there's more to this list, all the stocks that are in these groups. As you can see here, I'm only down to L. Now, these little 3 stars are magic in Q Edge. I click on those, and I get good earnings per share growth and undervalued stocks. So I'm going to click on those, and through the magic of PowerPoint, the cream of the crop rises to the top. And these in the leading industry groups, which are in the leading sectors, these are some of the stocks that came out. Some of these look very interesting. Here is Sprouts Farmers Market. Notice a bounce here off of trendline support with a person buy signal and a headwind. That is very interesting to me on the weekly, and on the daily it broke out of a wedge. That's also bullish. The only thing bad is you've got resistance up here up ahead. But I've actually looked through each of those, And if I remember, I'll show you some more. Canaries in the coal mine, these are, as Ian formed, gosh, in 2013. My God, he's been gone for a long time, hasn't he? This is 7 years ago. Not been gone that long, but he did this 7 years ago before anybody else was talking about FANG, and he called them the canaries in the coal mine. And he told us that these would be great indicators of what the market itself is doing. Well, they have not only held up for a little while, they led the markets over the last 7 years, and you can see they pull back with the market here, and they look to me poised to go higher. Know your news and earnings always is important. We have holiday, Columbus Day on Monday. On Tuesday, we got CPI, PPI on Wednesday. We got some jobless claims on Thursday, Philly Fed on Thursday, and Friday, retail sales and others. I guess the other big news this week will be the infighting in Congress over the Supreme Court nominees debate. This is actually Market Watch, not Bloomberg. My bad there. Earnings season about to start. We've got big banks with JP Morgan, Citi, Bank of America is here somewhere, right here. PNC, some of the regional banks, US Bancorp. Here's Wells and Goldman Sachs. So we'll get a big sense of how banks are doing this week. You got some airlines, you got Delta, you got United between Tuesday and Wednesday. So there's a lot on this list. We'll have more to come. Schwab will be the first time since they bought TD Ameritrade, and they closed this past week. Afria, which I believe is one of the marijuana stocks, will be interesting to hear what they have to say about the potential shift to the left in this country and the legalization of marijuana. As I say in the lower right-hand corner, and it's something that I should put on my wall to remind me, it is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. So what are my thoughts? Markets were quite strong this week. Russell was up 6.4, S&P 3.8, NASDAQ 4.6, and Dow 3.3. That is broad-based rally. The markets finished the week strong Friday with positive commentary regarding stimulus and on coronavirus. Interestingly, as I showed you, breadth did not outperform on Friday as the markets moved towards a short-term overbought condition. Right now, the least resistance appears to be up, with some strong support forming underneath the current market. However, as one of my friends said to me on Friday, this market should want to puke, considering the macro environment, but it just keeps going higher. As they say, don't fight the tape and don't fight the Fed. I too think the market has risk going into the election, and I suspect the continued war between the left and right, as fought in the media, will continue to be an issue. Perhaps we will see a post-election decision rally, regardless of the winner, as we move on from this divisive climate. I hit my high for the year this week. I'm now up 2.459 million on my model account, which is real money that I trade, that I started with a balance of 1.4 million, and that's 175% gain. Holy shamoles, year to date, and that's not annualized. I want to maintain my profits. As I've mentioned before, I'm building a new house out in Santa Fe, and every dollar I make here is a less dollar I have to worry about coming up at closing. I am planning on lightening up this week and raising cash, therefore going into the election. There'll be no video next week unless my wife decides that we're not going hiking in Golden State Park in the Redwoods and I have some time. We'll be on vacation, first in San Francisco and then Santa Fe. And you can see listed here the market this year, and notice that the Dow has now turned positive year to date. The Russell is about to turn positive. And in any other time, in any other place, a 29% return in the NASDAQ would be considered unbelievable. And just think what your accounts were doing in late February. Let's do my usual top-down review looking at the charts. 24 minutes in, I would anticipate probably another half hour. Market force and divergence. This is something that I do every day. I take the E-mini. So again, I'm still in futures, and I'm going to ask myself 6 or 7 questions. Question number 1, am I in a person buy or sell? Daily buy, weekly buy, monthly buy. Bullish. What is the color of my paint bar? Green, I can be long or holding. Red, short or holding. Blue, I can do whatever I want. Green, green, green. That's bullish too. Number 3, where am I in my envelope? If I'm above the envelope, I have to be aware that the markets have a tendency to come back, but I also know they like to ride the envelope. So we're a little bit mixed here because we're coming up at least short term on the envelope. Number 4, do I have any of these red dots, or what we don't see here is similar green dots, which are evidence of MACD convergence of its green, which is bullish, or divergence, which is negative if it's red. Don't see that. Then I'm going to look down here and I'm going to look at my high jump. I'm at 64%, so I'm not overly extended. When I get to where it's above this dash line and it says HJ 100, you know the market's pulling back. It's almost guaranteed. And then I look here at this middle row. The green dot says my weekly bongo is on buy. I look at this. I think it looks bullish. It may be getting close to being extended. I may have a day or two before the high jump is concerned. So I'm going to be looking for this to be positive at the beginning of the week, pending news and changes that occur over the weekend that I can't predict on Saturday night. And then we'll see where we go, because we are going to get to the point sooner or later where this market probably is extended. If I look at the Dow futures very quickly, it's buy, 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 green, 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 59%. Bongo's green, no dots. Same opinion, bullish. The Russell. There's that MACD divergence dot, but that went away, so it doesn't matter. It's been in a buy for a longer time. Buy, 83%, so it's getting more extended, as I mentioned before. NASDAQ futures, buy, blue on the weekly. 53 has some room to run. Again, why would I not want to be bullish in long stocks right now? We've looked at all 4 of those. If I look at the dollar to see something that looks different, you could see the dollar has a sell signal here and red, although on the weekly it's in a buy, monthly it's in a sell. The dollar is at minus 44, so it can certainly get lower before it bounces. All right, that's good. Let's go into HGSI. So what I like to do in HGSI is I like to find Major Markets Plus, which is in the Market Analyst group, highlight it, hit the warehouse view, and I should open up 28 different indexes. You will not open up 28. To open up 28, you need to add. You need to add the Innovator Breakouts, BOUT, the Innovator IBD 50, FFTY, and the Microsectors FANGs, FNGS. I'm going to put a top-down view, which is going to give me very short-term leadership. And what led the market? Make sure I'm ranked by raw combo. NASDAQ, mid-caps, Russell 2000. You know you're making money in growth stocks when the NASDAQ and mid-caps and small caps are leading. What lagged? Volatility, the dollar, TLT, and then the big stocks, S&P 100 and 500. So good week to be a small cap or high growth stock investor. Heck, it's been a good year. I'm going to open up 2 charts. Now, if you have HGSI, you open up the second chart by hitting New HGSI Chart Window and make sure you've got Link Multiple Chart Windows tab. So let's look here at the S&P 500. Why did I say we're building some good support? This red line here is the prior high before it fell. Then you got the 8-day exponential. The blue is the 50-day simple, and the green is the 17-day simple. They're all basically the same place. I would think that that confluence of moving averages might give some support to this market. Notice here, there's 2 days here with green bars. Those, my friends, are eurekas. Now, what is a eureka? Because we don't see them very often. A eureka is a HGSI equivalent of a follow-through day. It is calculated, and you can pick whatever index you want, based upon the AD line, volume, AD, and the ARMS index. And it's something that Ian taught us that demonstrates that there is institutional buying coming into this market. So we were in a squeeze. We had multiple breakouts. A John Person buy signal came in here. A couple of kahunas sandwiched by a bad day. A couple of eurekas, and the market takes off. If I was a betting man, do I think this market goes higher or lower? I think it goes higher, and my target is to get up to the prior high. And all bets are off when it gets there. I think with the election stuff, my guess is it might fail. Industrials, exactly the same story. Notice the Eureka, since it's calculated on the NYSE and not on the individual instrument, is going to be there on every chart that I plotted. Dow looks like the S&P. The Russell. Look at the move on the Russell. You had a doji here, a high close doji here, a person buy signal here, and just for grins, how far have we moved from the bottom of the doji to the close? 14% in 11 trading days. The latest run of the market has clearly been driven by the Russell. Again, this one is more extended than the others. But it's still got the 8 above the 17. The 50s and the 17 are about to cross. The 200, as I think said before, still trending down. All right, what about, let's take a look at the IBD 50. This is an ETF of IBD 50 stocks, and I believe it's created to match the IBD 50 as published by O'Neill in Investors Daily. And that looks like the NASDAQ, doesn't it? Breaking out, and got some nice support below it, getting close on the high jump bar. The innovators, breakout stocks, look like they've already topping, but they've also run up to the recent highs already, and have taken out their February highs already. So perhaps I shouldn't be surprised that it's running into an obvious place of resistance. And then the fangs should look a lot like the Canaries. And you could see they had slowly moving up. And I think that if this market holds for another week, they'll likely retest their prior highs. Also within the NASDAQ that I think matter, semiconductors, breaking out. If that was a stock, it'd probably be a Bible gap up. But a gap up on Friday, taking out prior highs. You can look here and see where on the weekly, back here was the February high, and we are 500 points, almost 450 points above the February high. I also like to look at biotech. And biotech had a very strong week as well. One thing that I did note when I was looking at this, and something that I think is meaningful, is notice the person market capture here started going up as biotech was falling. So there was a clear bullish convergence, as John likes to call it. This is falling while this is going up. Whoops. Well, that's going up is that's bullish. This signal came in. That should have been a good reason to go long biotech. All right. For completeness sake, I'd like to look again at the dollar. Not doing anything. Here's a chandelier stop breaking down below its moving averages. I like to look at the VIX. Again, breaking down below its moving averages, but not as low as it's been. Gold, maybe it's going to perk up here. Perked up quite a bit on Friday. Still got to get above its averages. Similar on gold miners. Got resistance right there. And then on silver, a move up, but still got some resistance to go through. If the dollar weakness persists, I expect them to go higher. If the market does well, I expect the dollar weakness to persist. Now we go to group number 7, hit there, and you can see I've got 175 different industry groups. I'm going to go to 2-day force, and I have 85. That's huge. That tells me the short-term momentum, very positive. If I look at 2-day force down, I've got just a bunch of energy, oil, gas, refiners, healthcare supply, interestingly. I'm going to comment on that, and department stores, I understand that, and publishing. Look at drug distributors. They were extremely strong over 5 days. They just pulled back some on Friday, so I'm not going to make much of that. What's also interesting, if you look at intermediate to longer term, I've only got one group down over that period, which is casinos, and I have 90 groups positive. So this market has really turned around, and we've had 5-10 days of strength in a bull run. These numbers are consistent with something such as a melt up. All right, let's take a look at some of the top groups. Renewable energy. The bad news is it's hard to find any of these that are buy points. From a extended perspective, here is Vivo Power International, Bible gap up, global breakup from a squeeze, and a kahuna on Friday. I just don't like this. It's a shooting star, and typically they go down from there, so I would not chase this one. This is a group that's been running for weeks. The stocks are extended. Jinx, 1, 2, 3. Last week I said it was getting too extended for me. I think I said it the week before. Boy, was I an idiot, because I would have had a 50% move over the last 2 weeks. That said, it still looks extended to me. It's pinned. Now, is this because of expectation of a Green New Deal and a victory for the left? Or is it fundamentally there's been a change? I think maybe it's a little bit of both. Here's the index, but I want to go below it. Plug Power, we talked about last week, moved up again. It's at overbought territory with a red candle high. Solar Edge, this is what you want to do. You want to find this pattern or this pattern. All right, you want to buy it as it's breaking off of support. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. We gave this to you last week here. You could have bought, or 2 weeks ago, you could have bought it on the following Monday. Enphase, similar story. I am long this from down here. Again, why did I buy it? A big white bar, a mobile breakout from a squeeze, coming off a confluence of moving averages with a kahuna. And Enphase has had a big run. I am in that one. Sun Power, they all look alike, don't they? First Solar has not had much of a run yet. It's got, at least this time, good numbers coming in October. If they meet it, don't necessarily see as much energy here. No pun intended. DQ, to me, it's Dairy Queen, but here it's a damn good looking stock. But it's gone too far. Great fundamentals. I can't chase these, and I can't recommend that you do either. I did talk last week about Canadian Solar, which was at 36 if somebody wanted to buy it. And you could see that wasn't a bad call, as you had a very nice weekly move. So these look great, but hard to buy them. Precious metals, they don't look as good. Notice none are above the index. Gold, American Barracks. Yeah, I had a doji, 2 dojis on the weekly. Looks like it stopped going down. No momentum here. My guess is it goes higher, but I'd like to see a little mojo. I do like AUY, a couple kahunas in a row, broke above the 50 on Friday. Wheaton approaching the 50. I'd rather it take out its chandelier stop there. I do like this one. This is a Sibanye Gold Limited. I think this is a recent merger of 2 companies. Again, does this not remind you of Enphase? A move up off the 50, person signal, and a kahuna. Kinross, another one that looks good. Newmont's lagging. Kirkland, a little bit of move up. It will be a positive story. You might want to watch Kirkland. The story here is the small ones look better. Here's a big one that looks good. AEM, about to take off. I put these as, a lot of these as pullbacks waiting for a signal. And to me, a move up above that chandelier stop is the signal. So quite a few to like there. One that I made a lot of money on a while ago is Goldfields, and it looks like it's time to buy it again. I participated here. This doesn't look anything like that, but maybe it's getting ready to run again. Semiconductor devices, these are way moved already. Xilinx wasn't doing much until it came out Thursday night that AMD may want to buy them. Big Bible gap up. I have a hard time chasing and playing that stock. NXP Semiconductors. You know, it's funny, about 2 years ago, the Chinese blocked a deal where they were to get sold for about $100 a share. Those shareholders were lucky because now it's 147. It broke out off of here. It's had a bit of a run, a little bit extended. Again, this here is a high jump. And when I say it's extended, it's because it's getting near the top of the range. Qualcomm, I bought some Qualcomm here, the same reason I bought Enphase, and I am in it. It's not as extended as some of the others, in the midst of a pretty powerful run. Earnings are November 4th. On Semiconductor, had a Bible gap up and then another update. Problem with these is you're going to be chasing them. Look at how many pocket pivots in a row, 3 kahunas and then a pop. This is Marvell Technology. Here's Analog Devices that broke out on Thursday. Another update on Friday. Probably not overextended yet. And how do I know that again? I'm looking right here. Can't believe this. It is 7:53 p.m. and my crazy dog is asleep in my bed. Maxim Integrated. That's because he hates me when I do these. Sideways move, and then a mobile breakout from a squeeze, the day of the Eureka, and it took off. You have to use judgment on these, whether they've gone too far for you. One that may not be too far is Infi. Now here's the corollary to that. The corollary is things that have not broken out yet, considering how many things have broken out, are they laggards? I'll leave that as a question. But not extended, broke out on Friday. Bongo turned a buy. This is something that is on my watch list. Group number 4, automobiles. It's easy. We got Tesla. Sideways move. Boring Tesla waiting for earnings. Says there's a lot of demand, not much movement in the stock. My guess of late they keep beating earnings and beating production. Probably goes higher, but that's an earnings play and we're not talking about that today. NIU is a Chinese electric bike manufacturer. They had great earnings and they're just taking advantage of being an electric vehicle company. NIO is one that I also have. Big run up, going sideways here right now, not a lot of momentum. E-commerce discretionary. Those who follow me know what my number one position is, so you know it makes my heart pitter-patter when I can say Amazon is a new buy. Run up, sideways, and it looks like it's getting ready to break out. Mobile breakout, new person buy signal. Had a kahuna over here breaking above the 50-day moving average. You can see the strength in the industry group. The weekly bongo is still red, so it's still well below its prior highs. Weekly person indicator went positive this week as well. I like Amazon. Pinduoduo also has a pretty nice pattern here. It's just too far down. I get a little nervous because I get above the chandelier and above the 50, so I may watch it. Not in a lot of excitement to go out and buy it. Netflix broke out Wednesday, moved up again Thursday and Friday. Its earnings are the 20th. eBay poked its head above the 50, again reminiscent of Enphase. Uptrend, sideways move to the 50. You've got a mobile breakout. You've got a John Person buy, a pocket pivot, and a kahuna. Again, those Eurekas are tied to the NYSE, and what they should tell you is that there's great underlying strength to the market. Hgsi. I think it's 2 weeks that I bought it. And I remember saying that I thought it was one of the best looking charts in the market. 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. It would have been right here where it broke out above the 50 with a kahuna coming off a mobile breakout from a squeeze. And it's had a big move since then and continues to go higher. The problem with stocks like this is it's hard to get out of now. They're getting extended. But that's your call, not mine. Mercado Libre, if you want a $1,200 eBay, similar pattern breaking out. It's like the eBay of South America. I also have a position in Alibaba, like many of the others. It's a big move, starting to be extended. JD, not extended. Bunch of pocket pivots. Person buy signal here. Have to clear the chandelier before I get excited. It does have some pretty impressive earnings per share growth. And for my neighbor Kathy, who I know held on to this, I actually added this to my buy watch. Doesn't mean I'm going to buy it, but it really looked like it was going to do something after Thursday with the Bible gap up, and then it traded up Friday. I don't like how it closed on Friday. The weekly looks pretty darn good with a high closed doji, so it's at least something to watch. I do like the next one, Chewy, which I think we both thought uptrend sideways and a breakout here. Coming out mobile breakout from a squeeze kahuna, John Person buy, weekly bongo, not overly extended. I like Chewy here as well. Lot of stocks to like. Application software. Zoom I've been in and out of. Sideways move, maybe it's a good time to go long. Look at if its earnings per share growth are phenomenal. Last time earnings came out, the stock went crazy. Nothing to say that doesn't happen again. I got to check the earnings date. It says here 12/3. Maybe it did come out already. Back down here. That's a leader. Salesforce, Bible gap up, sort of a shallow saucer, and it looks like it wants to go higher. Adobe, nice uptrend. To me, it looks perfect time to buy. Mobile breaker from a squeeze, a new John Person buy. I like that, not extended. I mean, the problem is you can only own so many stocks, and I already own way too many. Twilio was sitting here where I like it, and it broke out with a Bible gap up, and now it's running away. DocuSign, I'll let you look at Dropbox, which I liked as well. Why? I don't like this crap. It's very loose. It doesn't have a whole lot of upward momentum. But what it does have is 2 kahunas in 3 days, a person buy signal. It took out its 50-day moving average. I might wait till it takes out its chandelier. And I find this stock to be interesting. Here's how I would play. A lot of people ask me what I would do or how I would manage something. So let's look at DocuSign, and let's say that I was interested in it, and I am. So I would look here. The high of the day was 2048. The chandelier stop is at 2057. So the way I trade, and the way I trade doesn't have to be the way you trade, because that's how you trade and that's how I trade. All it means is how I trade is I want to buy it when it breaks out above that chandelier. So the first thing I would do is I put my buy will be at $20.60. Now I got to figure out where to put my stop. And I've got a couple of ideas here. Typically, I will put it, unless there's a well-defined stop on the chart, I would put it below the lowest of the last 4 bars. So that would be, the low here is 1928, so I'd put it at 1920. We'd be risking $1.40, which is a little bit less than 7%. I could do that, and I'd be fine with that. The problem is, I don't want to be in the stock if it breaks down there. I'm buying it because it broke above the 50 and it's above the 200. The 200 here is sitting at 1999. So why would I let it drop that far below? I'm going to put it, I'd put my stop at 1990. So I am risking 70 cents on this buy. So I'd have my buy stop, would be right above that red line. Oh, I hate when I do that. Let me try that again. Which was at $20.60. My sell stop will be right below the 200, which was at $19.90. I'll be risking 70 cents, and for every $1,000 of risk I'm willing to take, I would take 1,000 and divide it by 0.7. So is that about 1,300, 1,400 stocks I could buy? I used to be able to do this in my head. Calc. 1,000 divided by 0.70 equals about 1,400 shares that I could buy with that risk per $1,000 of risk I wanted to take. That's how I would look at something like that. The advantage of a stock, to me, that's sitting on support is I'm taking a 4% risk on that stock, and I'm giving it very good, it makes sense where those points are as far as how much room I'm giving it to run. When I look at something like, well, I have a position in C, but if I bought it tomorrow, I guess I could put a stop down here about 160, but the low on this day, and I'm not advocating you buying it tomorrow, is 155. And my buy point would be somewhere around 172, 173. That's an $18 stop. That is only 7.5%, 8%, but yowzer, that's too much room. I can't buy a lot of shares. But if I had bought it, say, right here, then my stop, even if it's the lowest bar in the last four, 110.50, and I would have bought it at 122, $12 stop, $13, it would have been a 6% risk. Buying it after a sideways move is a lot less risky to me than buying it on a flagpole run back. Commercial vehicles, I'm going to also strongly look, again, I've got a position, I'm going to add to it. Workhorse, why? Because they're bidding for a U.S. Postal Service contract. I believe it's U.S. Postal Service, a big deal for their electric trucks, vans. Yeah, you might want to wait till it takes out a chandelier stop, but you have a kahuna, pocket pivot, new person buy, pull back, and it wants to go again. And you can see it's been a weekly bongo green forever. Yes, I'm preaching my book. I already have a position there. Biotech, couple of words here. Alexion, there's some deal talk. I don't see a great setup in the stock. It's a story. Regeneron, another story. You know, it was a great play here where it ran from 400 up to 670. It's in a downtrend now. It popped because of the Trumpsters antibody cocktail, which made him better in one day, which was used off-label outside of any trial. I don't know if it's going to ever mean anything to Regeneron's earnings, but it stabilized the drop. It's not a great pattern. I'm not going to buy it because Trump took it. Turning Point, God bless you if you own it. It is overbought and hard for me to jump on here, even though that doesn't say it's not going to go higher. Precigen, I like this. It's been garbage for a long time, and it just broke above the 50 with a Bible gap up and a kahuna. A high close doji on the weekly, doesn't make much money, has revenue but doesn't make any money. Do your own research. I just like the pattern, but it's not a lot of growth that pulled back. It's just been sideways forever. Intella, here's one that also had a Bible gap up, sideways move, breakout. I find this a little bit more interesting, but it's starting to get extended. And just another comment about the COVID. The one company that's got a drug on the market that's being used commercially for COVID is remdesivir, which is Gilead. And look at Gilead stock. Everybody got excited about remdesivir, and the stock has gone in the toilet. I just don't think those companies are going to make a lot of money in COVID. Now, this is an interesting pattern, and it's also COVID related. Insight, they make a couple of cancer drugs. Stock's been in a downtrend, bounced off of support here at the 200. Took out the 50 on Friday, mobile breakout from a squeeze, a pocket pivot, new Bongo weekly person buy signal. They make a drug for rheumatoid arthritis that they licensed to Lilly, and Lilly announced some positive data for that drug in COVID. So it's probably a bit of a COVID story, but it's a biotech that makes money. Just leave it at that. Ninth group, internet-based services. Shopify, I made a lot of money on this. I had one horrible trade where I lost a lot of money, net positive on the year significantly. It's not based upon its fundamentals. They are the alternative to Amazon for small companies. Is it a great buy point? No. Is it probably going higher? Yes. Great story. Stock has been great except for this pullback during the COVID times back here. I like the stock. I'd rather buy it on a pullback. Coupa might be setting up a good buy point as it retook its 50. Alteryx pre-announced earnings and gapped higher. It's already run. Booking, like some of the other FANG stocks, looks interesting here. Breaking above its 50-day moving average. Trade Desk we talked about a couple of weeks ago when it was here. Beautiful run. Problem is I can't own everything. Alvara broke out from its story here. Chandelier stopped, took out the stop, and took off. It's beautiful when the same pattern happens over and over and over again. And the 10th group is Office Electronics, and this is all about this garbage, Eastman Kodak. I wouldn't even bother talking about it because it's a piece of crap. It's Robinhood, and it's a bunch of people that don't know what they're doing. Although that doesn't mean they're not going to make money. That was my top-down review. I did a bottoms-down up. Let me just show you the stocks that I liked. I'm not going to show you any shorts because I think the market probably goes higher and I don't want to confuse things. I did find 10 stocks that are potential shorts. Not that I want to go out and short them, but what I'm going to do is use them as an early warning signal. So, this is more than I normally have. 60 stocks on my buy watch. A bunch of application software. I showed you Adobe, that looks like it's at a good time, and Dropbox. I showed you Insight and Intella and Precigen. I really like Workhorse here. Imagine this one. Apple. Apple's setting up in a squeeze, had a mobile breakout on Friday, in a nice uptrend with a pullback to support. If I don't say that's a buy right there, then I'd be lying. On this one, I don't know what to do with. Turtle Beach, same, that's my pattern. Mobile breakout from a squeeze, took out moving averages, and its chandelier stop, and a kahuna. I've been burned by this stock before. It's a teeny stock. The market cap is $289 million. I love the pattern. I just historically have not done well with that company. FIS, I actually, as a consumer finance play, looks, setting up here. A couple kahunas in a row, mobile breakout from a squeeze, strong industry group. That's something that usually does well by me. I've talked about Fiserv in the past, that it's something that I've bought on pullbacks before, breaking above the 200, mobile breakout from a squeeze. MasterCard and Visa, my goodness. I mean, here it is, breaking above its chandelier on Friday with a pocket pivot, kahuna a couple days ago, out of a squeeze. That's MasterCard. Visa looks great here too with a kahuna. Lot of pretty stocks. I talked about the mining stocks. As you can see, a number of them were interesting. And it's probably this SBSW that I like the most. I wanted to find an energy stock. This is one that hasn't run that much in dollars. Clearway Energy, it's run a lot, but it too is extended. Great earnings per share growth. It's more of a utility. It used to be NRG Energy, I believe. There's got to be something wrong with this stock. Let me see. Recor pullback and moving up here, and not a lot of volume. Semiconductors, Rambus, this is probably a laggard, but it's breaking out here, so it's not run too far. Again, I always wonder about, is it right to buy laggards? Infi we looked at. Vonage, forget I showed that to you. And then what do you do with marijuana stocks? They had a couple-day move. These are probably winners if we go to the left in this election, which I think is looking more and more like that's going to happen. Just for grins, the list of shorts that I found, and my only intent with this list here is to watch them, and if I start to see stocks going down, these are ones that I might want to look at for potentially shorting. So, in summary, we had a hugely powerful week last week. The market outperformed to the long side. Growth stocks did great. I've given you a bunch of interesting stocks to buy. We're at that hour. Have a great weekend. Remember, no promises, but I am not planning next week to do a video, and that means I'll see you in 2. Markets melt up, but they also can blow up too. Goodbye, everybody.